Well, Kim, if you just joined us, markets in the money today are pushing ever higher even as we speak, but some notable losers today.
You're thinking Fortescue?
Yeah, absolutely.
Atlas Iron, agreed, because they look out of step. Caltech's out of step as well with what else is happening in the energy space. And probably, Telstra's given up a bit of ground, not too much. Let's just show you the overall market though. 0.8% move higher. You know, it's usual suspects really. It's BHP up 0.8%, Rio up 1.7%, and the banks. So basically, if you have banks and a couple of key miners moving in sync, and if they're moving high, you've got a gain on the market. It's as simple as that. Nikkei index, you're looking on screen there at about 100. Well, it's triple-digit gains, or 1.4%.
Imagine 14,000.
Right, let's talk Dr. Copper. Global barometer on the health of things. Dow, it's down at 18-month lows as of yesterday, and that was really tracking that weakness in the Chinese PMI data.
Yeah, this poor result yesterday just seemed to reinforce some of the concerns when it comes to prospects for demand. Not that you'd notice if you're watching equity markets, but let's go to Pete McGuire, who joins us from NG Farah. Pete, good to have you on board.
Good morning, Brooke.
Dr. Copper, the global barometer, someone was saying last week, that's crap. It's all about the oversupply.
Well, I don't necessarily agree. Well, yes, in turn, as far as the global supply, and good morning, Carson, but the PMI numbers coming out, and in reality, it's sitting at 18-month lows. I think that there's every chance you could see it punch through 6,500 to the downside, which is, you know, we get some sort of indication. That shows us the true weakness of that whole commodity complex. And, you know, one's only got to put their mind back, you know, a couple of years, and it was 50% higher through $10,000 a metric tonne. So at 65 to 6,800, I think it's got to be a buy, you know, if it gets much lower. Say $6,200, $6,300, I think it certainly is a buy.
How much are you basing that around still PMIs are in growth zone territory, not contractionary territory for China?
Yeah, but still only at 50 or 51. It's nothing, you know, nothing out of the box. I think that they're saying the second and third quarter will be stronger in China, so that gives me a level of confidence, and I think that US demand, and they're talking now that should see continued growth in US equities over the next, you know, 3 to 6 months. So that May to October go away doesn't necessarily weigh with me this year.
Doesn't a weaker PMI though actually trigger fresh stimulus and trigger a fresh round of demand for these core commodities? Well, isn't that the story we want to see? Yeah. Not a hot number that sees, you know, persistent
overcooking.
Correct.
Yeah, well, there's no doubting that, and I just feel as though that the way that the world's going at the moment as far as currencies, and we saw that massive sell-off as far as gold in the last 2 weeks, I think you're going to see possibly a little bit more movement to the upside for that copper market, and that's why I'm saying 62, 6,300 could be a very good, strong strategic buy.
Goldman Sachs seemed to be part of the catalyst for the big drop-off in the price of gold initially.
Absolutely.
That biggest drop in 3 decades. There was a couple of days before that as well, though.
Yes, it was, April 10.
What's this feeling now after we've had a bit of a sell-off? I know it's bounced back again, but where we're sitting now, what's the feeling of... What's some of the calls out there about where it goes next?
Well, last week we were all very nervous, and I said you'll see a $40 to $80 uptick, and it's up about $80 from those lows that we experienced on Tuesday. Now, where the market is at the moment, Brooke, there's certainly ETF. We've seen closing out of positions there as far as exchange-traded funds, and that smart money, or that money, has moved off to equities. Now, where the gold market is at the moment, I think that 1410, 1420 range, it seems to, I think it'll probably stay and maybe oscillate between 14 and 1450 over the next week or two. It's hard to put some sort of forecast any further out than that, because you've got so many key determinants. From the Goldman Sachs story is still saying that they see weakness, and they're saying under 1400. So I think you possibly will see 1400 to 1450. Let's just wait and see what happens as far as any further geopolitical.
There was an interesting comment yesterday from Chris at IG saying you might start to actually get gold reacting to weak data. Again, going back to probably Carson's point, that you start to get weak data, it triggers calls for fresh stimulus, and therefore it kind of reignites that trade again.
Yeah, I think so. And look, there's only so much money, we keep on saying that, but the money, I think, has gone certainly into equities over the last week and a half. People liquidated positions, margin calls and so on. And if the appetite is not there, then that money will find a better home. They're not going to the bond market, they possibly are in the FX market, and certainly in equities. So we've seen a very strong move for S&P and Dow over the last, really the last couple of weeks, and I think that will possibly continue. 1600 is very much a on everyone's radar as far as S&P. Let's just see over the next couple of weeks, but I think you possibly will see a little bit further upside.
How much of the crude kind of floor is being driven, in other words, the loss is limited by that rally in equities, sort of a spillover, feel-good factor that just cushions the selling thematic?
Well, it brought it all up, sure, you know, but I think that where the crude market is at the moment, I can't see anything to really get WTI back above that $91, $92 in the short term. I think supply's okay. We've got no disruptions. Demand is relatively weak. It's not knocking it out of the park. So,
well, what about the OPEC kind of collective decision to pull back on production? Because that's surely in all their members' interests.
Yes, of course, but I think at the moment...
Have you heard anything more on that?
No, I haven't. There's been no major talk, and you know, you scour the news, I don't see anything really to show us anything on that sort of pathway. Consumption certainly in the Northern Hemisphere summer is traditionally higher, but you know, we've seen some... Just as far as numbers are concerned, I don't see anything really to be of any great worry out there. But US equities certainly are pulling it up with, and of course that goes across to the oil producers.
Cast your eye domestically and the kind of response housing might take from the CPI print today. Markets seem to be hedging their bets over a cut next month, although still the bias is for a no change decision.
Yeah, I think 35 to 45% are saying that they'll see a cut. You know, well, that's interesting. I wouldn't be surprised to see one by July or August. I'll throw that one out there. But if you look at domestic demand, and certainly as far as what we're seeing as far as auction results in properties, what we've seen is that 59% in Sydney's homes have had higher prices than reserve. So as far as demand out there, it seems to be quite strong, and there's no shortage as far as, you know, there's a real shortage, I should say, as far as supply in eastern beaches. So that's going to be interesting how that plays into the spring season.
Are you noticing that trend as well on the switch, the Gen Y kind of push into homes versus apartments? You know, this been talked about in generational.
I think it's more apartments. I think that's where people want to go. They don't necessarily want to mow lawns. And what's also interesting is self-managed super, that the 30-year-old and over are looking at property as possibly a better investment than equity markets. So that's interesting in itself as well.
Pete, we've got to take a break. Thank you. Catch you soon.
Yeah.
Stay with us here on Sky News Business. We're looking at the latest online broker offerings for DIY investors with Canstar after this break.